Alright, good morning everyone. It's Richard here from Ninjacators and welcome to Wednesday's edition of the Morning Bell. Alright guys, as you've probably all seen yesterday, the markets sold off pretty strongly, especially on the indices side. We're also watching crude oil initially come down pretty strong, but it recovered pretty well again. Gold also pretty decent sell-off there. So this happened after yesterday's release of the CPI numbers, which were worse than expected. So, this just sort of like feeding into the Fed's idea that they should raise interest rates again during the meeting next week. I think that's on Wednesday, if I'm not mistaken. So yeah, they're going to get a hectic rate hike or not. Probably another 75 basis points, whatever the case might be. I'm expecting quite a lot of volatility during that time frame, potentially even leading up to that. So, yeah, it's going to be interesting to see how the markets behave when the stock market session starts today on the industry side of things. So, but if things continuously, price continuously drops, then I'm definitely going to start siding with that bearish alternative count that I've been talking about for a couple of weeks now. Anyway, we'll look at the charts in just a few seconds. Just to look at today's economic calendar. We've got to produce price index figures month to month. I don't think any of this is going to have any impact on the markets. Everything or anything to do with inflation these days, like I've said many times over, is what is creating all this volatility. So we got crude oil inventories at 10:30 a.m. EST. The PPI numbers, like I said, tomorrow we got core retail sales or retail sales figures. And then on Friday we have the preliminary University of Michigan consumer sentiment figures. So again, not sure that these economic news events will have any impact. I think the damage has already been done. As we've all seen yesterday in the markets. Interesting to see how things will react, like I mentioned, and also how things or markets would react next week with the rate hike decision. Alright guys, you might notice something new on my screen here today. On the left hand side margin of my chart, I've got the pure pattern trader bundle indicator here that we use at Ninjacators. I'll be quickly showing you guys how I like using this indicator. It's something I do tend to use now and then. It's basically there to help me spot technical patterns or price patterns, whatever you would like to call it, on chart as they form in real time. It's also got a really nice scanner feature. So before I talk about that, please stay towards the end of today's session. We'll probably go on for about 30 minutes, go through all the markets, and then on the last market on gold, I'll quickly show you how this indicator works if you're interested in this indicator, and as well provide you with the link if you want to go check out more information on it. Alright, so quick recap on the ES. As always, set on the daily time frame. Obviously massive downward day yesterday. I've had this standard pitchfork on my chart for the longest time. We were watching this strong decline. While it was happening, price reached the center median line of that pitchfork, bounced upwards, just pipped the upper 50% dash median line, which is this line over here, and strong reversal down to the downside. Alright, now we've identified a lot of these areas as prices are moving up towards those areas as potential resistance zones. At some stage, when was this? In mid-August, we were thinking that we potentially seen a three-wave sequence to the upside, and we were expecting some sort of a corrective structure followed by another move to the upside. If that happened, that would have given us a nice 5-wave sequence to the upside, meaning that we could expect then a corrective move and potentially then a much larger move to the upside. Now, as we all know, that didn't happen. We've been following the sessions, these live analysis sessions. Price, in fact, found a little bit of support within a previous area, and this area was determined using a volume profile. It had a small bounce higher on the ES and the NQ as well. And it was around about the time when Fed Chair Powell spoke during the the Jackson Hole Symposium, that prices immediately reversed lower and bam, went straight down to the downside. Now we had this little support zone previously here between 3,382 plus minus, guys, and 3/4 on the lower end of the support zone, and 3,916.25 at the upper end of that support zone. Disregard now this bounce that we've seen that price moved into. We also had bullish divergence on the daily time frame on the MACD divergence indicator we also use here at Ninjacators. Strong bounce to the upside, and again failed within that zone that we termed previously, and it's basically bouncing around between two volume profiles or large peaks in the volume profiles. And obviously yesterday with the CP9 numbers coming out, boom, straight down to the downside. So as I said before, I didn't get this beautiful nice 5-wave looking move to the upside, which is why I also, let me just zoom out a little bit, proposed that there could be a potentially much bearish scenario underway here, i.e. that this could still be an incomplete corrective pattern, meaning that price could potentially still be heading towards the June lows and potentially even much lower. And what I've mentioned by that previously is, and let me first do this, is that what we've seen here within that red box looks very similar to what happened over here in that box over here, obviously to a much larger degree this time around, or during this sort of time period. So from a price pattern perspective and a corrective structure perspective, we initially thought that we potentially have seen an A, B, and a very extended C wave into this center median line. We expected that we needed to see a 5-wave bounce to confirm that low, and that this was potentially just an ABC corrective move. Now, we didn't get that nice 5th wave to the upside, and now subsequently seen a very, very strong decline. So before this actually happened, we said that if price would break these previous lows in September, was this like the 6th or the 9th of September, which price is very close to actually on the ES, that we'll probably side with the bearish alternative, meaning that this is potentially a WXY pattern that's incomplete. Now what I mean by that is that we potentially add an A here, expanded flat B, extended C wave, another expanded flat that was similar to this area over here, and that we're now potentially seeing another A, B, and a C. So a WXY pattern, you have an A, a B, a C, and that's your first zigzag, and then you have another zigzag, and they're conjoined by WX axis, as we call it. That's what I marked on the chart here. If this rings true and price does break below this previous pivot or low, like I said, on the 6th or the 7th of this month, then I really do think that this is a possibility, meaning that we could potentially head even lower over the course of this year. Well, this year's almost finished, to be dead honest. Maybe even into the first quarter of next year, depending on how volatile things get. Unless we get some sort of insane V-shaped sort of bottom move straight back to the upside, then I'll discount this idea. But at the moment, this is what I'm thinking, that there's a good possibility that price could still head lower. And that confirmation would be if price would break the 3,882 and 3/4 area. This little zone that we have here. Alright, so that is a definite possibility in my mind. Whether it happens or not, obviously, we'll have to wait and see. And I mean, after yesterday's strong sell-off, are we going to just continue lower or just muck around here for a while into next week's interest rate decision and then see a reaction? That I can't tell you. But yeah, all eyes will be on that interest rate decision next week as well. So it would be, yeah, a pretty volatile time period in my opinion. And if this pattern does ring true, then like I said, potentially going to get another strong move to the downside. All right, now wherever that can go, it might retrace very deep. It necessarily have to make another ABC that's going to come down towards here. It could just as well have been an A, a B, a C that breaks these previous lows. And let me get that exact low here for you. 3,657. Potentially pip that and reverse higher, depending on how the structure looks if price moves lower into that area. Alright, a slice through that area with a 5-wave sequence might mean that we've only seen the first A, with another B later and then another strong C to the downside. Right, so all depends on obviously having the patience to wait for that to materialize and also trying to read how price structure has developed into new lows. But for the time being, and I've said this last week as well, price would need to overcome this previous support zone that turned into resistance now for me to be bullish. And we've seen a sharp decline, so it's really hard to motivate any sort of like bullish bias here at the moment, or saying that we should be buying into this market. And like I also just mentioned, we might just muck around here or retrace part of this candle or just continuously move lower today. So it's really interesting to see if we are going to have a continuation of the sell-off or just starting to enter a range into next week's rate decision. Alright, so that concludes the ES. How are we doing for time here? Alright, let's quickly have a look at the NQ. Alright, that's loading a little bit. It's because of this new indicator that I've got on here. Again, I'll show you in just a moment when we get to gold. It does tend to take a little while to load. It does quite a lot of calculations. Come on. There we go. Right, so obviously same thing on the NQ. Quick recap, we had a confluence area here, same time window, same time date when the ES reversed to the upside, NQ obviously reversed to the upside as well. It reached here different market geometry lines, or a 50% dashed median line of an upward sloping pitchfork, also using anchor points for this pitchfork that extend quite a long period of time backwards. Alright, reach an area. We had a similar thing here that we were saying that we potentially had a 1 leading ABC potentially there, or you want to count it a third wave, expecting again some sort of a correction followed by another move to the upside. Again, same thing with the NQ. If we had that sort of sequence, that would complete it, potentially another move downside, and that would be very bullish. Also assumed at the time when price bounced here when we started the service that this was potentially the end of a corrective move. So price structure very similar to the ES on the bigger picture, but then again it reversed very strongly, and we also had bearish divergence at that upper percent dash median line. Remember, we identified these zones prior to price getting there, and we had a strong drop to the downside. Price nearly reached one of these median lines. It sort of hovered around there. Previously had this as a support area, 12,782.5 on the lower end, and it should actually be a bit higher because the upper end should be higher, sorry, because we changed contracts. What was it, from the September to the December contract? So price again found support at a market geometry line. Beautiful retracement right into one of the median lines again and got rejected yesterday. Strong move down to the NQ. So same thing here, guys. Where's this line? I'm gonna actually update that. Hang on 1 second. With the NQ being so close to the 11,998 level again on the December contract, which are these lows that were set on the 6th and the 7th of this month, then that would just even add more fuel to the idea that we're going to potentially see a retest or a break of these lower levels that was set in July. Let me mark that out. Sorry, June. Or was it June? Yeah, July, sorry. 11,145. Again, we might just muck around here. The median line over here, the low 50% dash median line might act as a little bit of support. But again, who knows? After a sell-off like today, are they going to absorb a bit of that selling pressure? Bulls trying to get things back to the upside, but certainly doesn't look good. That's for sure. Very, very strong sell-off on the NQ as well. Same as with the ES. Alright, so not much to say on the NQ really. It's now just basically a waiting game. See how price reacts or continuously reacts to ESA CPI numbers. Okay. Guys, if you have any questions, by the way, please do drop them there in the chat box. I am also streaming to YouTube, and I've seen, we got a question from Carlos Martin, which is in Spanish. Luckily, I do understand Spanish quite a bit. And he's asking, where do I get this horizontal line in NinjaTrader that has the price label? I think that is what he's asking me. Again, in Spanish, I'm just translating that at the moment. Carlos, hopefully you can speak English properly, but it is a free indicator that you get from the NinjaTrader ecosystem. Let me quickly see if I can find that for you. Where was it? And then I'll be happy to quickly drop that link for you. Carlos, I'm replying to you right now. So I'm trying to get you that link quickly. So labeled, or should be 1L, sorry. No, I'm obviously not going to find it. But Carlos, just hang on a second there. Let's just finish the presentation quick. I do have that link somewhere, and then I'll forward that to you. All right. It's basically a drawing tool called the labeled horizontal line. Oh, that's the one you should put in. Go to NinjaTrader's ecosystem and punch in the labeled horizontal line there, and it's there available free to download. And whenever you drop this line in, it will give you actually the price label. Okay. And if you can't find it, then towards the end of today's session, I'll quickly help you with that. All right, let's quickly proceed to crude oil, and then we'll look at gold as well as the pure pattern trader indicator I've got on my chart. All right, so yesterday we had an initial sell-off in crude oil. Wasn't anything spectacular by any means. But price pulled all the way back again to this low 50% dash median line. Remember, for quite a while I've been saying that price potentially challenged these lows that was set in March and in April this year, which did happen. But it's how price got there. That's been a complete nightmare from a swing trading perspective with this extremely messy price action we've seen to the downside. That being said, price has been respecting these median lines that we had on our chart for quite a while. Basically this pitchfork using the three most prominent anchor points prior to this decline to the downside here. But it hasn't reached that lower center median, lower median line just yet, and it, like I mentioned, it's very easy to see up, down, up, down, up, down. So unless you day trading this, then not really a great market at the moment to swing trade if that is your style of trading. So our price objectives were reached, but then again, trying to get there or trade towards there would have been an absolute nightmare. I do, however, think that this could potentially be some sort of a leading diagonal. All of this mess that we're seeing here, that's either complete or still going to make one more move to the upside with one more lower. Let me just get that snap mode off again before we get another move to the upside. And if this is a leading diagonal of some sort, that'd be pretty bearish for crude oil over the longer period of time. So from a resistance perspective at the very moment, snap mode off again, we're right at this lower 50% dash median line. It's been acting as resistance a few times. I think if it punches through here, then upside resistance on crude oil would be the center channel line, which is also market geometry lines that I've had on my chart for an extremely long period of time. They too have been acting as really good support and resistance even during the market moving to the upside. Okay, so immediate resistance potentially now, though it already tested, crude oil already tested at 88.43. We're now on the October contract, and right above that at 91.55-ish we got this center median line, center channel line that might act as resistance. So quite a little bit of a gap to the upside here. So if we do get a break or a close above the 88.43 area on the daily close today, we might see another snap up to 91.55 or potentially even higher. So not really much to say in crude oil. Just be careful at a little bit of resistance, but it's been testing it twice. We get a break up here, we could potentially see another strong move upwards. On the downside, however, if we break yesterday's low, then we're potentially going to head finally to this lower median line. And how quick that happens, I can't tell you. Which currently lies around about 79.21. All right. Can everyone still hear me okay? We're going to get over to gold now, and then we quickly going to chat about the pure pattern trader indicator. Gold, December contract. Let's give that a second to load. Here we go. Overall picture, we've been mentioning that I am still of the opinion that all of this mess that started since this high in August 2020 is some sort of a very complex, crazy looking fourth wave correction. And maybe I can zoom out to show you that a little bit better. I should probably go to a weekly time frame, but I think you get the picture. I think this high that we've seen here was some sort of a third wave high, and that we're now experiencing, or gold's experiencing, an extremely frustrating and crazy fourth wave correction that we initially thought potentially was some sort of, if this was the third wave, an expanded flat correction where you have three waves followed by 5 waves to complete the correction and then a move higher. So that would be a complex, potentially double zigzag for the a B wave over here, another 3 wave move, and then a 5 wave move to complete the C wave, and then price is going to shoot up to the upside. Now we got a beautiful 1, 2, 3, 4, 5. We even had bullish momentum divergence, as shown by this green line over here, right at a lower red warning line of a pitchfork that was tracking this entire move to the downside. We had a beautiful bounce to the upside. We had upside targets and projections. And here too, we were thinking that, or I was thinking at the very least, I shouldn't put the blame on anyone else, that we potentially also, similar to what we've seen in ES and NQ, seen a 1, a 2, that we've seen a 3. We're going to see some sort of correction, followed by another move up. And if that happened, that would confirm to a very high degree, in my opinion, that the low in July was potentially the end of that 5-wave sequence. Now, price did however move back into the centimeter line of that same pitchfork that was drawn way back here in April. It overshot it. It did it by the same distance as it did previously, here in June, to the T, and reversed strongly to the downside again. Made it back to the low median line. We don't have any momentum divergence on the daily just yet. And price came excruciatingly close, and this was on the 1st of September to breaking this low at 60.99, 10 cents. Am I actually on the right number here? Let's see. Yeah, 1,696.5, sorry. And oops, yeah, this line over here. I've got too many lines on my chart at the moment. It just fell short of it, bounced higher. We said that this could potentially have been a ABC, although I don't like a corrective move that retraces so deeply. And we had this short little move back to the upside, and again found resistance at one of these median lines, as well as an upper median line of a small pitchfork that we drew into the upside. Now we had these levels up here to look out for, and then yesterday, same as what happened to the ES and NQ, gold just bam, come straight down again. So I still think that this might have been the end of a corrective move, and that gold has now the potential to break this low that was set in July and potentially even move lower. So I'm not really trading gold or even crude oil from a swing trading perspective at the moment, but that's what I'm thinking. I think I'm still bearish on gold. I don't think that C wave of that entire expanded flat has ended yet, and I think it might move even lower. Again, also a market that will potentially be, I think not potentially, most likely be affected by the interest rate hikes next week, if that happens. They always say something and sometimes they don't actually do it. Who knows? We'll have to wait and see. Alright guys, before I conclude today's session, let's quickly talk about the Pure Pattern Trader bundle, which is the indicator I have, or we have here at NinjaTraders or Ninjacators. And it's here on the left hand side of the my margin of my chart. It is an indicator that you just upload as per normal using Ninjacators indicators, if you use them before, or like any other NinjaTrader indicator for that matter. You import it into your chart and you basically have this beautiful toolbar on the left hand side here. Now you can expand this toolbar and you'll see that what it does is actually look for some of the most popular patterns, and guys, as they form in real time, and you can also see them historically on the price chart, depending on which ones you activate or deactivate historically, and how they would have turned out. So it's a really cool, nifty indicator to use, because if you are a pattern trader, then it can alert you potentially of patterns forming on any time frame that you like to select. And depending on which one you select here, you see they're all in red. It's because I deselected them. Let's quickly have a look at ones we have seen recently. Let me just get rid of this and clear this chart a little bit. On gold as an example, if I right click on there, it also tells you on the drop down there's a double top, double bottom. If I do right click on it, you'll see there hasn't been any during this move to the downside. That being said, there was a beautiful one over here, And remember, this pattern forms as price is moving around, so it's doing it so in real time. And I also talk about a scanner feature that's built into the system to alert you of these patterns, the ones that you're actually following while they're potentially happening. And what it does is it gives you, see these lines here, and it's got this riggedy up and down lines to the upside, which basically the volume that it also represents during this pattern. It then gives you a validation area that would validate the pattern, and as well as a projected area that price potentially could reach if that pattern gets validated, as well as an invalidation zone. Alright, so there obviously are some nuances to using an indicator like this. I don't just trade any pattern. I want to see these patterns, for example, materialize at areas that I'm interested in trading at, and obviously using my market geometry techniques. Then, I don't know, we can use, let's say, for example, the head and shoulders. None of those popped up. What about cup and handle? Yeah, even inverted cup and handle. It's a beautiful scenario over here. And obviously this is on a daily time frame. If you go to smaller time frames, there will be way more of these patterns showing up historically, as well as ones you could potentially identify on smaller time frames as well. So just a really cool indicator to use to help you with patterns if you do follow patterns. Again, like I said, let me just go to a 4 hour before I finish today's session. And here's a good example of a head and shoulders. Obviously inverted head and shoulders that the pattern recognized, and obviously you'll have to double check this as a human as well. Always confirm with your own knowledge if you're actually seeing a pattern or not. It gave you a validation level as well as a target projected area, and this would be a potentially good setup that I would potentially take, because if you were bullish at this stage and you get the breakout or validation of this, in this case inverted head and shoulders pattern, then it beautifully moved into a target projected area, but also knowing from a market geometry perspective that you could expect resistance with when price hit this line. So you probably want to be out of that market at that stage. What's that other one that didn't show up? No. Let's quickly look at this. Yeah. Beautiful sort of double top sort of formation, validation area, target projection. Now once you see patterns like this, like topping formations for example, at areas that you don't identify like I do with market geometry, then they do make for really, really, really good setups. Okay, so that is that indicator. If you guys are interested in potentially using that indicator, I do have a quick link here for you guys, and I'll quickly paste that into the chat boxes, all the places I'm streaming to. If you guys are interested in checking that out, then please go and have a look at that. Alright, Carlos, just quickly before I finish today's session, let me quickly go have a look at where that indicator is again. It's called the horizontal, label horizontal line. Sorry, I'm typing on a different screen here. I just want to get that for you quickly, Carlos, and then we're going to end today's session. Yeah, here it is. Got it? I know, Carlos, you were asking about that. And you just import it as a normal indicator, but be careful. It's not going to pop up in your indicator list. It's actually going to pop up as a drawing tool. Okay. Right, guys, that concludes today's session. Thanks very much for watching. Again, let's see how the markets react today. Might still be in for quite a bit of volatility. So again, be interesting to see how markets react now when the stock market session opens. Okay, guys, thanks very much for watching. And again, I'll be back on Friday with another session, same time. And I hope you enjoyed the session. As always, let me know during any of these sessions if you've got any questions. I'll be more than happy to answer them for you. Cool, guys. Thanks very much and all the best. Take care that side and goodbye.